Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar edged higher for the fifth consecutive day, on Friday that is, and reached an intraday high or weekly high of 76.16 before it quickly pared back those intraday gains and stumbled back to 75.80, where it pretty much opened this morning. It is assessed that the market is still struggling towards the top side, and while we continue to see weak indicators from the RSI and also from a MACD, which is negative, does indicate that we should see further failed tests towards a region above 76 and look back towards the support at 75.45. Looking at the euro, we can see that the upset test towards that 119.90 break level didn't eventuate too much and rejected and closed pretty much flat on the day on Friday. But the weekly outlook still remaining negative. We've noted that from this morning we are a little bit weaker into the upcoming European session. This week, much eyes will be looking at the non-farm employment change, or the non-farm payrolls number, which is forecasted for a rise of 700,000, with a previous release at 559,000. While the unemployment rate still remains somewhat subdued in terms of around 5.7. Looking at the technicals, I do anticipate that the weakness can see the bears navigate towards the support region somewhere around 118.60, which was the rejected area. Now a close beneath there would see further risk towards 117.50. The US dollar index, which measures the greenback strength against a basket of 6 major currencies, posted a weak doji dragonfly, which implies further up tests are expected, but maybe a slow grind. Nevertheless, the forecast that I've called from last week remains at 93 figure 50. The dollar yen, we can see that the market has reached the top side of its channel and now moving into the third consecutive day is sliding lower. I do anticipate that if we see a strong break of this midway point, could see the slide towards the region of 109 to about 109.90, that is, or maybe a little bit lower around that 109.50-60, with the immediate target seen at 110.45. Nevertheless, I feel from the technical aspect, we do need to see this clear break, because previously didn't quite get there, but we were close to the bottom side of the range from that hammer that was rejected. Therefore, let's see how the market plays into this week. As I mentioned, I am somewhat slightly in terms of holding a view of stronger yen to a weaker dollar. The pound was weaker on Friday and now still remaining to its objective, which is somewhere around 137.40-45. I do anticipate, first of all, though, the level of 138.10 was a tough challenge to crack and may find short-term demand emerging if we get to that level. But overall, from the hesitation towards that top side around 139.80-90, keeps the bears pretty much intact to the downside navigation that would see sterling yen also sliding lower, as the bears recently caught briefly the level of 153.45-60. Now, looking at the technical aspect, though, we are underneath the midway point. We have an are seeing a slightly weaker MACD as the recent recovery seems to be lagging. Keep an eye on this MACD and also the signal line, and therefore a move through the zero would give it further indication for a slide down towards the region of 152 figure 10. The gold aspect has continued to be pretty much a lackluster price action after we earlier noted that 1,760 objective was reached and rejected. However, we can't seem to claim above that topside level until we get a break above 1,800 figure 06, that is a close of New York. Then the risk is still towards that downside target. Now, beneath 1,760 exposes the region to a measured target of 1,720 to 25. Wrapping up with oil. Well, at present, the shooting star was negated, but the divergence is still somewhat there from the MACD and also from the RSI. I am a little bit cautious, although there isn't really any strong calls to direction. But while we remain underneath the resistant region of 74.15 to 35, and we're currently trading around 73.72, is that I'll be looking for a pullback. Now we do need to see a close under 72.05 to confirm a move down towards the bottom side of this range, which is around 68.5. Into this week, all eyes will be looking to OPEC when they meet on July 1st and see what comes out of that meeting. Nevertheless, bears are still lurking as I see this divergence. Well, that wraps it for today. Thank you very much for joining me. As always, look out for the intraday report. I hope you enjoy the great start to the new week.